All right, let's get into it. Today we're digging deep into Voltamp Transformers, based on a brand new analyst report. Now these guys are a pretty big deal in India's electrical equipment scene, so the question on everyone's mind is this a stock you want to own right now? Let's see what the experts think.
Okay, so no beating around the bush. Here's the final score the analysts gave it, a 7.2 out of 10. That's pretty solid, right? But you know, a number like that isn't just a simple yes or no. There's always a story behind it. So let's unpack what really goes into that 7.2.
So, the final verdict from the analyst, it's a buy. But hey, we're not just going to look at the headline and call it a day, right? The real juice, the thing that actually matters, is figuring out why they're saying that. So let's get into the nitty-gritty of their argument. First things first, what's the big picture? This is the core investment thesis. Basically, the 30,000-foot view of why the analyst is so optimistic about this company. You know, the main argument here is pretty simple. Voltamp is in the perfect spot at the perfect time. Think about it. They're basically set to surf this massive wave of India's infrastructure boom and the huge push into renewable energy. Plus, they've got a packed order book, they've proven they can get stuff done, and they're planning to get even bigger. That's a heck of a combination.
Okay, to really get why this is such a big deal, we need to zoom out for a second. Let's talk about the market Voltamp is playing in because, wow, we're talking about a full-blown power boom happening across India. I mean, the scale of this is just mind-boggling. The government is pumping 100 lakh crore into infrastructure. They've got these insane renewable energy goals. The entire grid is getting a facelift. And on top of all that, the Make in India policy gives a huge leg up to local companies like Voltamp. These aren't just little breezes, folks. These are hurricane-force tailwinds. Just look at this number for a second. 500 gigawatts. Let that sink in. That's the target for renewable energy by 2030. How do you even get there? Well, you need a mountain of new equipment, and guess what's right at the heart of all that? Transformers, the exact kind of stuff Voltamp makes. This single number is basically a giant flashing sign that says, massive opportunity here.
So, okay, the market is enormous, we get it. But the big question is, how is Voltamp actually positioned to grab a piece of that pie? What's their secret sauce? Let's dive into their winning formula. So if you look at where their money comes from, yeah, the big chunks are power and distribution transformers. That's their bread and butter. But check this out. That growing slice for renewable energy, that's the really exciting part. It's already at 15% and growing fast. And here's the kicker. It's a higher margin business. So more of that sweet, sweet revenue drops straight to the bottom line. And you want to know if this strategy is working? Well, how does 24.5% revenue growth year over year sound to you? This isn't some pie-in-the-sky projection. This is happening right now. They are absolutely crushing it on the top line. Now here's a number that'll make investors happy, an 18.5% return on equity. What does that actually mean? Well, it's pretty simple. It means the company is incredibly good at making money with the money shareholders have given them. It's a classic sign of a really well-run, efficient machine.
And get this, they're pulling off this incredible growth without loading up on debt. Their debt-to-equity is just 0.4x. That's super low. It means they've got a rock-solid balance sheet, which gives them the freedom to handle any bumps in the road and, more importantly, to pounce on new opportunities.
Okay, let's pump the brakes a little. It can't all be sunshine and rainbows, right? Every investment has a flip side, and this analyst report is very clear about the risks. So let's talk about the other side of the coin, the headwinds, and yeah, that pretty hefty price tag.
So, what are the potential banana peels here? Well, for one, raw material prices. Copper and steel can go on a roller coaster, and that can really squeeze their profits. Then you've got fierce competition. And let's be honest, working with government clients can mean your payments take forever, tying up a lot of cash. But the big one, the elephant in the room, is the valuation. The stock is not cheap.
And this really sets up that classic tug of war, you know? The bull versus the bear. The bulls are looking at this incredible growth story, tied to these giant trends in infrastructure and renewables, and they're saying, let's go. But the bears are tapping them on the shoulder, pointing at that high valuation and saying, hold on, isn't all this good news already priced in? Which brings us to the final reckoning. How did the analysts take all of this, the good, the bad, the ugly, and boil it all down to that 7.2 score and a buy call? Let's check out the final scorecard. This table lays it all out. Look at the top scores. Financial health is strong, and growth prospects, an amazing 8.2 out of 10. And those two are weighted pretty heavily. But then, look all the way down at the bottom. Valuation, Oof, just a 5.8. So what does that tell you? It's pretty clear. The analyst is saying, yes, the stock is expensive, but the growth story and the solid finances are so powerful that they overcome that high price. And this kind of shows you the different paths this could take. The analyst's main target, the base case, is 5,200 rupees. But if everything goes perfectly, the bull case, we could be looking at 6,500. On the flip side, if those risks we mentioned actually hit hard, the bear case puts it down at 3,800. So you can see there's a lot of upside, but you got to be aware of the downside too.
And that, my friends, leads us to the one big question this whole thing hinges on. The opportunity is huge, no one's debating that, but the price is high. So you have to ask yourself, how much of that amazing future is already baked into the stock price today? That's the $1 million or maybe $1 billion question you've got to decide for yourself.